Hello and welcome everyone to Silver Asset of the Day for the 17th of March 2020, presented by myself, Phil Carr, at the Gold and Silver Club. Now, we've just been putting together Gold Asset of the Day with you, where we discussed our position that we've entered near to the 1470 zone was up over 250 points. In fact, the silver video has been recorded for you after Gold Asset of the Day, and gold has just had a capitulation breakout, which puts our position up over 640 points. This is very interesting because the gold to silver ratio is now starting to break down. The gold to silver ratio yesterday and off the Sunday open broke out to historic levels. It hit the highest level on record at 122 to 1. Effectively, that would mean that you are able to exchange 1 ounce of gold for 122 ounces of silver if you are able to exchange that at spot price, because it's that significant. Historically, we've never actually been this high, where silver is such a disparity to gold prices, and silver relative to gold is so cheap right now. Now, with the moves that we're seeing develop some momentum during the US session today, with gold just breaking out significantly to the upside, silver is starting to catch a bid here, and so is platinum. In fact, silver, you have to remember, has broken down to 11-year lows on Monday, and platinum has broken down to 18-year lows. This is the most extreme oversold that they've been in over a decade here. And what you've seen across the board, as I'm sure you're aware, is with the big sell-offs that we've seen on global equities, the S&P 500, the Nasdaq, the Dow Jones, and the limit down move that they had yesterday, where trading was paused and halted because of the over 7% move that we saw to the downside of the open, and also the Federal Reserve emergency rate cut. It didn't really help here. We saw immediately traders fade the move and the S&P 500 sell off significantly. This tumbled through to other markets. We saw big sell-offs on gold, on silver, on platinum, on palladium, on crude oil, and now the dust is starting to settle a little bit, and we're seeing these markets catch a bid. Silver broke down towards $11 per ounce on Monday, and on Tuesday it's starting to catch a bid, getting back above $12.50 per ounce. Now, of course, these are the lowest levels for silver in over a decade. You want to watch the gold to silver ratio. As that starts to roll over and break down, that's where silver can start to catch up with gold. I would be mindful of the potential for V-shaped reversal patterns and capitulations to the upside at these levels. I discussed this in detail on our week ahead commodity report, where that was the anticipation to look out for bids, because we've become so extreme oversold here. You could start to see hedge funds, money managers build positions at much lower levels and then start to build up momentum to the upside if the S&P 500 and global equities are able to settle and start to catch a bid, which we're seeing a bit at the moment. But again, you want to be really nimble in the markets. We've already protected our trade with gold. We've taken some partial profits off the table here. It's now up over 640 points to the upside. Silver, I'm continuing to watch at these levels. I want to see whether it will close with a reversal. On the daily charts, you want to look out for those high wick candles that you see at the moment, with these rejections basically of key levels, which for silver is support coming in at under $12 per ounce. And the gold silver ratio is very key to track. If it starts to break down further, that's where silver can start to build momentum. Now, silver has had an accelerated move to the downside, a bit like platinum as well. Platinum has actually pulled back over 50% in 1 month. So it broke down from $1,000 all the way down towards $500 in just 4 weeks. So incredible moves that we've seen. These always set up for some really lucrative opportunities. If you go back to 2018 with palladium broke down as low as $800, and it was then able to triple in price over the next 2 years. So these massive deceleration moves to the downside, de-inflationary moves that we're seeing right now on the metals, once they do get supported, once you do start to see them catch a bid, can very quickly start to make up for lost time, and we start to see them catch a bid and some tremendous opportunities. But for the time being, there are some great range-bound opportunities as well to both sell short and go long. We discussed this previously, where hedge funds and money managers, they were trimming their net longs on gold and silver. So we were expecting some degree of correction on these markets, particularly as gold broke out to 7-year highs. It was moving into a cycle where normally it does correct anyway over the month of March, and we've definitely seen that on both gold, silver, and platinum. So with these market conditions, great for trading. The volatility that you might have to wait several weeks or months for to get a 1,000-point move, for example, on gold or platinum or silver, you're getting it in just 1 day at the moment. So if you can get on the right side of these moves, you can catch some really fast gains, as we've already done with gold today. So with that, that's been Silver Asset of the Day. And of course, I wish you good trading.